Manolete. Now, I interviewed, this is very interesting. I do hold these, of course. I'm biased. Assume straight away I'm biased on this, okay? But I think this has the potential to a recovery play. I'll tell you why. And if you didn't read my post on it or didn't watch the video thing, they've gone through almost a horrible perfect storm to now a positive perfect storm. So COVID, essentially, of course, government support during COVID stopped businesses going through. You couldn't, administrations weren't happening because government support. So Manolete business really suffered because that what they do, they chase basically directors and all that for debts or loans or that they need to pay back when a company goes into administration. And in fact, they're the biggest financer of that kind of litigation in the country. Now, scroll forward a couple of years. Government support is gone. Okay, there are more zombie companies going through than ever because of COVID support, and on top of that, we've had high interest rates, inflation happening, and cost of living crisis. Many more businesses are going through. In fact, they're now 30-year high in administrations. So it's huge. So they've gone from almost having no business because the government, stopped business going bust to now having record cases. And in fact, worth reading a trading update. Just go through the figures. They're not out of the woods at all. But I think, wait for the final results, but I think they're improving. Now, this is I put this in because this is how you look at it. It's about case numbers and the value of each case. Now, they've gone through lots of these little mini businesses that have gone zombies. And the case has been like 96 grand, I think it was, per case. Now, this is not typically for the full year results, but they're saying this is how it could stack up. So you get case numbers, the amount of cases that are complete, and the value will revert, they reckon, to 180 grand, which is where it was in 2021 before COVID kicked in and all that. Right now, if they do that, and if you look back at the previous results, their pre-tax profit margins were 22%, very good. Now, if they do that, they're literally going to be doing a pre-tax of 21.6 million, which is put that on multiple 10, and you're looking at about 262% up compared to their market cap right now. That's if they do that. And I said they're now getting, and if you look at their trading update, they're now getting case values going up and case numbers going up. So it's worth a look at. Like I said, I've only got small in it as normal. 1% of my portfolio is tied up in this. I'm a little bit down on it, and I've got the 20% stop loss in. But I think it may be a good recovery play. And in fact, when you're looking at recovery plays, you think, where's the evidence this is recovering? Where is the evidence? So look at the recent trading update, read that. But even if you look at the half-year results recently, you can see there's a bit of a turnaround happening. Where is it? Where's Manolete? Did I go past it? Manolete. There we are. So they are 61 million market cap, upside 86%. That's my estimation on these case numbers. Okay. Now they are having a broken note come out apparently after their final results. But let's look at the results for interim. So that was the last set of results. You can see they've gone from a 5 million operating loss, 5.2 to 1.5. So you could say the recovery for the first half of this year has been quite good. If that continues, and they do say they're going to be making a 2.5 million pre-tax profit compared to last year, which is like 3.9 million. So there's an improvement going on. If it continues, we don't know, but we'll see. There's a net debt, but like I said, that will hopefully be coming down now. They're generating cash again. But nevertheless, it's not in an uptrend, and I probably bought too early again. It's my fault. Lack of so we can see it's broken 50-day. There's a little bit of a higher low. To me, it really needs to. Oh, where's it going? To me, it really needs to break that. This previous high here, close above that, which is maybe 155. We're at 140. It needs to get above 155. This level here as well, where it's sort of previous sort of support, and that's what I'm thinking. It's a risky one, but I think it has potential. And in fact, look at the previous results. We go back here to previous results. You're talking like operating margins there, 25%, 22, 18% net margin. So again, it's one of those companies where it comes back into play like Canex there, and they achieve those previous margins. And I've literally not gone to that. Well, in fact, I've gone to that margin in 2026. So I'm slowly building up the margins over the years. And I think if it does that, then there could be a decent upside. Again, there's some ifs in there, some buts in there, but up to you. Up to you. Remember, we are historically businesses going through like never before, and that's compounded by the cost of living crisis. So the backdrop is very good for them, and in fact, it's been accelerated because there's more companies going bust. But like I say, there's Ed says yes. Definitely just waiting for them to break 154-ish. I dive in. Yeah, I think wait for the uptrend. Because the results coming out, it may dip down on that. But if there's a recovery on, we'll see. I think always wait till you get more information, definitely. Graham, yes, Mano, Stephen CEO has 15% skin in the game, and they were held back by COVID. Check out the other shareholder register. John Moulton, who's like worth about 180 million. He's in the Times. He's the biggest holder. Secondly, there's a Saudi family worth billions, and they were the biggest holder in Burford Capital. And the third biggest holder is Stephen, the CEO. So I don't know that. The only thing I don't like about Mano, this is Mick, is I don't like what they do. They chase rogue people and then go on them. But I suspect innocent people will caught up, threaten letters, persistent pressure. Yeah, they generally dealing director loans. And he said, when I assume some people get caught up, but when directors, he said, you tend to see when directors know a company's going bad, they start taking loans from the company, taking the cash from the company. And it's that chasing up they do and all that stuff and all that kind of stuff, Rob, not for me. Don't like the huge spread in the price. Okay. David Lordley is a big fan of this. Is he? Okay, that's very good to know. Mano, not yet, but one to watch. Definitely one to watch, yes. I said plenty of time. Plenty of time. Wait till the final results come out. Then wait till the book note comes out and see how they improve. And then maybe wait for the next trading update in the interims. And if they keep improving, there's plenty of upside there, So don't jump in too early. Like I said, you're better off being late to a great party than early to a crap one.